and welcome to Inside the Mind of a Trader, the show where we explore how brilliant traders are wired for success. I'm Dr. Indre Viskontas, neuroscientist and professor of psychology at the University of San Francisco. My next guest is James Kostulias. Hi, James.
Hi, Indre.
So, as part of my job at the university, I have to give advice to young undergraduates who come in, and they often come in and tell me what their parents want them to do, but what they really want to do. And I have to say that a lot of them choose majors that their parents don't really approve of.
Okay.
And history is one of those majors. But here you are, head of trading. With a history major. So how does your history major come into the work that you do?
I honestly wasn't exactly sure what I was going to do with the history major. I always loved to read. I always loved to write. And I kind of sort of lucked into my way into finance back in 1998 at a small company called Daytech Online. One of the things I found, though, with the history major is it's so important to help you understand context. And for me, in the world of finance, whether it's around sort of what condition the markets are in today, whether it's around some of the things you've sort of seen historically, whether it's looking at stock prices or price of other instruments, like context is so important.
So I want to talk a little bit about this context idea, and how do you teach that to somebody who's just getting into trading, who's really looking maybe at the markets, who are looking at the numbers, maybe even someone who's coming from more of a quantitative background. How do you tell them what to look for in terms of context?
Yeah, so I think obviously data is important, and there is so much of it within the financial industry, and context is critical, right? No doubt about all that. I think, though, the historical element that helps us with, obviously, you know history, you learn about history, you understand history to try not to repeat history. Mm-hmm. At the same time, you don't see a ton of history repeating itself exactly when we look at the markets, but you certainly see patterns. Obviously, if you look in the world of technical analysis, it's all based on patterns. And so one of the things for me that's really important is to have people understand, maybe it's a market cycle and going through a severe market downturn, or maybe it's a great rising bull market. There are certainly things you learn and you can pick out from previous ones that are important to help you think through. Maybe it's not to make an exact decision based on what you've seen in the past, but maybe it influences your plan, or it influences the way you're thinking about a trade, or it influences you to maybe not make a trade, which is sometimes a really important sort of step along the way of some of the risk management practices.
One of the things that our brains are really good at is pattern recognition, but usually for patterns that we find personally relevant. So, for example, we often see faces in like cliffs or a piece of toast, and these are, faces are highly relevant to us. They're highly important to us. So we'll see them even when they're not there. And I wonder if you have any thoughts about sort of how pattern recognition both is something that we as humans are skilled at, but can also lead us astray when we start seeing patterns that aren't actually there.
Yeah, look, I think it's true for patterns as well as sort of historical repetition, where absolutely you need to be really, really careful. Just because something looks similar to an event, or it looks similar to a head and shoulders pattern, or whatever basic technical analysis pattern you might want to use, you have to factor in a lot of broader context, right? And so I think it's helpful to understand, hey, I've seen this before. What may have happened? What didn't happen relative to price movements or things like that? But it's also really important not to just go all in on that assumption. I've seen this before. History is going to repeat itself. It's going to happen exactly the same way. So I think that's where you can get in trouble, especially if you start you have a losing trade or a losing position, and you go down a path. I've seen this before, and maybe I want to double down on that trade. Sometimes that may work, and sometimes that may get you into a much worse sort of situation. And so I think learning from the patterns of the past is really important, but not assuming they're going to happen exactly as they did. There are just too many other factors at play.
What are some of the other skills that you think traders should really be working on as they try to improve their ability?
Yeah, so a lot of what we do and a lot of what we talk about at Charles Schwab and with our whole offering of Schwab trading powered by Ameritrade, it is the educational component. And so traders are constantly learning and hopefully constantly evolving, right? They're constantly adding to their playbook. Whether you're somebody who's, more fundamentally based or more technically based, there's so much to learn across how to trade different instruments, across how to trade different markets. We believe we have the best value proposition across that full continuum, across the entire street, right? And so we have Schwab Trading powered by Ameritrade as the core trader brand. And then we've got all of the different wealth management components offered by Charles Schwab. And we believe now for 35 million clients, we can really offer the best value proposition across anything those clients may need, whether it be, super active trading at one end of the spectrum or more, long-term investing / I want help managing all of my money on the other end of the spectrum. We can really do it all. What I would say is, continue to learn, continue to evolve, continue to read, continue to interact. We have tons of educational courses and content and articles and tutorials and webinars and all of those types of things. But continue to learn and continue to educate yourself. I think from what we've seen, people who are constantly looking at learning new things, maybe it's, new features within the platform, or maybe it's sort of gradually upgrading to more derivatives trading. But just constantly looking and evolving, I think is really important. There's no sort of one playbook to trading. I think that's a really important concept for people to wrap their head around.
I mean, and that feeds into something that is also really human. We are curious as a species. Our boredom is something that is actually aversive. It can be physically painful to be bored. So, we gravitate towards learning new things and where things are changing. Yeah. What are some ways that people can use maybe either the historical example of the markets or so forth, where maybe they can see some patterns or they can see elements, pathways that might not be the next new thing, but could actually be this good, solid thing?
Yeah, so I think there's an element of trading that can be a bit of a grind, right? And so what we like to talk about, though, is having a plan and being sort of set to it. And sometimes it's a lot of little profitable trades that ultimately end up making you real nice money over sort of a longer period of time, as opposed to sort of that one giant trade. If you want to, use the lottery ticket example, we sort of don't like to sort of ever go there. But I do think, to your point, it may not feel as sexy as sort of that, hey, I want to go out and sort of, make a splash with this big trade, as opposed to having a steady trading plan and a steady trading philosophy where, you're making a few percent here and there and you're hedging your winners appropriately, you're cutting your losers. And so I do think, trading can seem really fun and really cool. And I think there's an element of it that does excite people, right? The whole notion of seeking alpha is that belief that you can beat the market, you can beat whoever it is on sort of that other end of that trade, right? Anytime you're buying, someone is selling, and vice versa. But I think at the end of the day, the traders who are really successful understand that there's work to do to sort of grind through some of that. And it isn't always going to be, the perfect market for you to, sort of sit back and make easy money. I mean, there are time periods where it seems like anybody can trade and make money, right? We had a little bit of that run up around the meme stock mania. You saw that back in the .com boom of 2000. But I think the experienced traders and the best traders understand over time that it is a process and there is a lot of work, and sometimes there can be a little boredom in that, and you've got to sort of kind of muscle through that a little bit, if you will.
And then the other kind of aversive state that can happen, I think, is the stressful one. As you mentioned, there are times when things are stressful. What are the tools that you would recommend that people look for to help stress management?
So I think where trading gets the most stressful is where the emotions take over and where you start to feel like, hey, I need to be right about this, or I am right about this, everybody else is wrong about this. And there are times in the market you can be absolutely right in your concept, or your theory, your hypothesis can be correct. Your timing is wrong. And sometimes that proves to be actually the worst sort of case scenario of everything. And so I think the number one thing we try to talk to people about is sort of take that emotional element aside. So have a plan when you go into position, have an exit strategy on the upside, have an exit strategy on the downside. Don't get too caught up in the I have to be right here. Don't go down the path of continuously sort of chasing your losers and sort of double down, being okay to recognize you make a mistake. You're going to make mistakes in trading far more frequently than we'd all like to, which is totally okay. Try to keep your mistakes smaller, and then also be comfortable at a point in time where you're okay to take your winners and at least take some of those profits off the board, because I think that's the other sort of flip side of it, is that FOMO, right? That fear of missing out, of I don't want to sell now because it can continue to go up, continue to go up. Often you will look at the worst trades you make are the ones where you get too emotional, where you think it can only go to the moon, or you think it's going to definitely reverse because you know something that nobody else knows. And so I think, to me, it's taking that emotion out, having a plan, and really trying to stick to that plan, even if things don't go your way.
It's amazing how much mindset has an influence, even on the way our physical bodies work.
Yeah.
You don't like running, but somehow have run 4 marathons.
Not well, but yes.
But there must have been a time in that marathon where you used some mental skills to get through and finish ultimately.
Yeah, I would argue marathon. I did finish all 4. Yes, one right here in the lovely city of Chicago. I would say probably more mental than physical, and I do think there are some absolute sort of trading parallels. Back where I said there are going to be periods of time when you're just grinding through things, and it's not going to be sexy, and you're not going to be feeling great about your time for this mile, but it's another mile done, and it's another mile sort of finished. And I think, at least for me, when I started, it was at a point in time where I really want to get in shape. I didn't have a ton of time. I had 2 young kids, and things were busy, and work was a little crazy. So I got the most bang for the buck sort of running. And I could argue that there are parallels you could draw back to the trading world, where, again, if you want to be in this for the long haul, if you want to do this and consistently generate profits, you have to take winners off the table maybe a little earlier than you maybe think you need to, or cut bait with a loser because you don't want it to have a negative impact. You could have 3, 4, 5, 6 months of solid returns, and then all of a sudden have 1 or 2 trades that end up essentially canceling all that out. That's not typically the way that things should be done. But in the moment, you may want to double down on sort of that losing trade. And so I think sometimes there's just log the miles, try and keep them under 10 minutes and sort of just keep going. And eventually when you hit 26 miles, you got that last point too at the end, but you're pretty close. And there again are parallels to the trading world that I would draw there.
We're going through yet another technical or digital revolution. And sometimes it can feel like a bit of an arms race against computers when you're thinking about trading, as opposed to against just the other person on the other side of the trade. How are you thinking about this future, and what kinds of skills do you think people should really be, beyond the strategic planning that you've mentioned, and kind of understanding the context? Is there any other skill that you think people really should be thinking about as we go into this new frontier?
Yeah, it's certainly not a secret that technology dominates a lot of the trading world, right? There's a whole school of algorithmic trading that is sort of no people, right? And it's just, I think from what we see, our most successful traders, our most successful clients are very comfortable with technology. They're very comfortable with the platform. The platform isn't what's making them money. The platform isn't what's giving them these magical trading ideas and these perfect buy and sell signals. But they're using the platform as sort of the instrument to execute what they've got going on up here. And so, being comfortable to use the platform and sort of all of the different tools available, whether it be sort of Thinkorswim is our premium trading platform, but being able to use the platform to validate your hypothesis, to seek out new trading ideas, right? You may have a theory somewhere, but you're not exactly sure what instrument you're going to use to execute that. So being able to do scans, being able to execute technical studies, being able to dive deep into news, those are all things you can absolutely do on the platform. At the end of the day, though, you can program for buy and sell signals. You can even automate goes ultimately if you want, but it's really you who are making that ultimate decision. And so I don't see a time anytime soon when it's like, hey, I want to be a trader, but I don't want to actually have the mentality of a trader because I'm just passing this all off to a robot to do. I don't think we're anywhere near that. But I do think using technology sort of as your instrument, maybe as a musician might, ultimately to execute and to bring to life what you're thinking about is really, really important.
Well, James, thanks much for being on the show.
My pleasure. Thank you.
Join us next time as we look inside the minds of brilliant traders.